Hi, today's ticker symbol will be Netflix, and we're going to try to do an analysis, a deep dive into to the stock, if you should buy or sell or wait. Obviously, if long term till 2030, we're going to be looking at it. If you buy it today, we're going to look at the dashboard, estimators, SmartScore, and then technicals, and whether you should buy or not. Okay, and for the analyzer tool, we're going to use earnings valuation method. That's how we're going to analyze the stock for 2030. Okay, we're going to obviously look for 2027, 2028, 2029, 2030 in the future as of today. So let's start. First, before we start, we have to actually look at this. The fear index today is 19. So every time it goes 20, above 20, that's when it's you're actually in the buying zone. In general, obviously in the S&P 500. So let's look at Netflix. Smart score 8 out of 10. Like I said, we're going to run this through quick. Financial leverage, low leverage, so it's good. 8 out of 10, good, scored good. Profitability, high. You want to always be above 10% for these two. So it is good. 10 green flag right here, which is good. And then we're also going to look at in the dashboard, we're going to look at the green flags and the red flags. So cash flow in capex, really good, strong cash flow, light capex, not like Google and Meta where their capex so high that it drove cash flow negative. That's the problem with capex. And solid growth, as you can see. This is good. It got 8 out of 10, but the problem is this. Next year is only 3.8. This is the red flag that we will be talking about in the dashboard. Valuation under under 1.5 is good. Under 1 is even strong. Forward PE below 20. Buffett style, which is amazing. Good. He's probably looking at it. Oh, below 20. So he'll look into this. And then high return on capital. Like I said, above 10% is good. Above 20% is strong. Consistent 5-year sales growth. You can pause the video and look at this if you want to, because I'm running this fast. I'm trying to make a short video. Large cap. Analyst, it's a buy rating. Track record has strong EPS growth. 5 years, 3 years, and sales. Amazing. Momentum. This is for technicals. We're talking about if you should buy it now and hold it. And we'll see the return on it. If it's a buy now, not or wait. So this is for technicals. We'll also do technicals later on. Dashboard. Let's go to our dash. Netflix, as we can see, 1 year. Look, it's going down, up, down, down, down. And then cash flow, it's good. Looking pretty solid, looking pretty good. It's going up, down, up, down, up, down. Capex, insignificant number. We shouldn't worry about it. They say they're gonna in the future capex will still be low. They say 2 to 4%. So they're not gonna be investing in heavy AI just like Meta and Google. That's what drove them down. And Microsoft's up for now, but maybe it's gonna go down just because of capex. EPS growing, amazing. As you can see, keeps going up, which is good. Over the last 3 years, it grew by 30%. Over 5 years, 20%. Over 10 years, 50%. We're probably going to use this number again for our earning valuation method tool analyzer, if you should buy or not. PE ratio, we're going to look at the PE ratio. Currently 23, average 34, lows 22. It's near the lows. I mean, if you want to buy it, it's a good buying zone, I would say. I would buy it, hold on, and then you can maybe sell it if PE ratio goes up or the price goes up. The PE ratio goes up near 30, then it's a selling zone. Right now, as of right now, it's a buying zone, definitely. It's literally near no lows. So peg below one, we already discussed this. This is our analyzer tool, but by AI evaluation method analyzer tool. They're saying it's gonna be 302 by 2030, which is hard to, we're going to use our own analyzer tool. We're going to fix these numbers up later on. This is from AI. Here's the big red flag. Misses, misses, every earnings it misses. But la Q1 missed by 10%, missed by 5%, missed by 17%. So it keeps missing. But it seems slowing down. Up, down, up, down. Maybe this one's gonna miss again too. We don't know, we won't find out. And then we're gonna look at revenue, like we said, it's going up. Net income going up, which is good. Green flag, check mark. Cash flow, up, down, 26, not done. Check mark, green heart. CapEx, insignificant number. Shouldn't worry about it. 0.8. It's not even that serious, so it's fine. Shouldn't even look at it. This is amazing. And ROIC, since 20, above 10%. So since 2020, they've been killing it. Till today, 26, 31. So it just even got stronger here. 24, 26, 30, above 20. Strong here. And then shares outstanding. They're not diluting their shares, so they're pretty much keeping it the same. They're not issuing more shares, so your shares are pretty safe if you're buying it today. It's not gonna go up as of right now. It's flat. It's better to see it going down, but it's not as of right now. It seems to be flat, and then the revenue keeps going up. That's positive revenues, if you can see every year by year. This is probably because you just started 2026, so it's not that high. I don't expect it to be this high this year because of the EPS. They keep missing it. So that's the issue. So it's probably, let's look at our analyzer estimates, what they're going to say about the EPS going forward. 3.8, what they said is 5%, like I told you guys, or the analyzer said. Lows, highs. Anyway, by 2030, it's going to be 6.3. Low here, high here. So if you want to go conservative, you can use 6, and then this is our revenue growth. We're going to run to our analyzer tool. And first, we're going to check the checklist actually before the analyzing. 10 years, it's below the 10 years of Netflix, 23. It's pretty low. Fair price, if you add the high and the low, high and low, you'll get $95. So that's how I check if it's fair price. Growth, peg below 1, strong, very strong. Analyst, this is not correct. It should be, I believe, $90 to $95. That's what they're expecting it for the next 12 months, according to analysts. Now it's selling at $73. So like a 30% upside. And then company is growing 30%, which is good. That's, if you can pause the video and look at this if you want the fair value. That's if it hits 50 high. Bull case this year, which will not happen. Bull case this year won't happen. Will not happen also. Could happen, possibly, maybe the end of the year. This is, could happen, but most likely it will not. Maybe only a 10% chance of this happening. Most likely it's gonna hit $90 by the end of the year, $90 to $100. And then the price right now, it's saying buying price. Pretty much, if you want to buy the stock, $70, as you can see here. This is the fair value, and this is a meter. And then we're gonna run our earning valuation method. Okay, if the PE ratio stays at 23 for the next till 2030, and EPS only grows by uh, that's according to analyst. Obviously, that's the number they use. They use 20%. For your information, just to go back to estimate, they use pretty much 20%. It's more of, what is it, 19%. That's probably the number they use, 19% in PE ratio. So by 2030, they're expecting the price to be $146. Let's go conservative, 15. 127. You want to even go less? 10%. That's I don't think that's even possible, but we'll just do it. $106. Okay. So then like we said, we always compare the stocks. So let's compare it. Netflix stock is compared to its competitors, Disney, Roku, and then we're gonna view it. Netflix wins. Disney second, Roku third place. I'll say. You can pause this and look at it if you'd like. PE ratio, Disney wins. Forward. These are both good, by the way. This is bad. This is just really bad. These are pretty good. Under 20 is good. Peg under 1 is good. So these two are good here. EPS, these are pretty good to be honest. Revenue growth, good, good. Both of these are good. This is not so good. It's slow. Maybe that's why it's 15. This is good. This is good. And then net margin. See, it wins. Operation fair value 30%, 30%. So comparing to the two, all of these or three, you should definitely pick this in comparison. Now let's do the technicals real quick. If you should buy or not or hold. According to as a long-term investor, you should buy Netflix. Now let's look at the technicals. If you should, what you should be doing. It's a weak pullback. Usually, when there's a pullback, that's when you should be buying. Depends. It's saying daily buy according to AI. Weekly, bearish. Monthly, bearish. Weekly, it's moving up. It went up by 5%. Um, as you can see here, it's low. You can pause this and read it. As of right now, it's not oversold or overbought. It's neutral in the middle as of today. And then we're gonna look at the trade view from technicals perspective. I have a signal to buy. So when you have a signal to buy here, we turn around and we look at the daily chart. As of right now, see this is a signal to buy because it just crossed over, but I wouldn't buy it yet till it actually goes near the green. Let's just look at it right now because we have a signal here to buy and the volume's green. So let's investigate this. Let's go to our daily chart. Daily chart. It's saying strong buy daily chart. As you can see, there's a lot of green volume here, and it is an uptrend. But to be honest, you should have bought Netflix according to this. Probably somewhere here. When it touch the green, because this is daily, remember, or here even. You should have bought it here, and then went up, and then went back down, as you can see. But there's a lot of red volume. So this is actually not a good sign. This is actually not a buying zone just because of the volume. You always have to watch the volume, not just the the indicators. So here we have green, red, green, red, green, green. Maybe today is the buying day. So as of right now, technicals, it's a buying zone. I say it'll probably pick up. It'll probably go up all the way to here. So it's probably gonna go all the way to here, and then then it'll probably go down. So it's probably gonna hit $80 pretty soon. Maybe this week or within the next 2 weeks. You're probably gonna see it hit $20. And then here's the meter. If you want to go through it and read it, pause the video and look into it. And that's it for today, folks. And then thank you for your time. So for just to wrap it up, for Netflix buying long term, holding it till 2030. is definitely a yes, because you'll get 106. This is conservative. That's being fair would be honestly 19. And remember, if the PE ratio stays this, most likely it'll go back up to 25. So I say between 130 to even 165 by 2030. So it should be 100 and like percent to 120% back if you buy it today at $73. I mean, sorry, did I see? It's not 100%. It's not 100% return. No, it is. It is. Sorry. Okay. Thank you for your time. And then maybe tomorrow we'll do meta stock. And have a good day.